It's been quite an interesting couple of weeks for us Intel shareholders. Unfortunately, it started with some bad news. Stock dropped under $20, as low as it's been since 2012, which didn't make much sense. But of course, lots of negative momentum with the stock, with the company financially as well, didn't help the cause. Plus, at $19 or so, the company was trading at tangible book value, which basically means bankruptcy types of companies. And then I see comments in each and every video, oh, it should be worth $10, $5. I don't think you actually understand how these things worked. I don't think you understand how valuable Intel's assets really are. So $5 a share, $10 a share makes absolutely no sense. And so it's no surprise that we're seeing some reports here and there of other companies interested to acquire Intel's business or parts of its business because they can see the value of Intel worth now $94 billion. I mean, we're still talking about Intel here. I did cover the company the last couple of weeks a lot. You can watch those videos. I provide you with a lot of information as why I'm still bullish, why I bought more shares, and why I do still think that Pat is the right guy to lead this company to that big turnaround. Now, of course, things could have been much better, of course, but we should be blaming the previous management. The previous management that was only interested in paying a dividend, that was only interested in buying back expensive stock, and not really interested at looking at their main competitors, who, by the way, was close to bankruptcy 10 years ago, which is AMD, did not look at them and say, oh, wow, they are innovating quite fast right now. Maybe it's time for us to invest in the next generation, the next big technological shift. Oh, maybe we should be looking at NVIDIA as well. Maybe we should be looking at this AI stuff, data centers, invest in OpenAI as well. But no, previous management did not do that. And so Pat came back in, puts down a quite ambitious roadmap, 5 nodes in 4 years, is delivering on that promise as well. Of course, from a foundry's perspective, Gaudi data center type of things are not really doing that great as of right now. Could be changing in the next coming years. But it is making a lot of sense to see those rumors of, well, sharks circling around Intel. More specifically, we've had some semi-reports about maybe Broadcom being a little bit interested. Qualcomm might be interested as well. As you can see here, Qualcomm on the screen, incredibly well-run company. Stock, in my opinion, is still a very, very good stock to own. Buybacks, growth, dividend as well. This is basically the comparison, Intel to Qualcomm. Qualcomm, of course, more profitable, growing quite fast. Yes, it's up quite a lot year to date, but still, I believe this is still a very, very good company to own. Now, of course, when you have rumors of a company A acquiring company B stock usually goes up, company A stock usually goes down. Now, Qualcomm is worth around 2 times what Intel is worth today, around that thing. So it's probably going to be a cash plus share. So for every share of Intel you own, you're going to get whatever the deal is going to be in Qualcomm shares. Now, do I want this deal to go through? No, because I think that Intel right now, $95 billion in market cap, it's the bottom of the bottom. Now, of course, do I mind owning Qualcomm shares? No, not at all. But I do think that my shares will appreciate more in the future, of course, if, that's a big if Intel does manage to turn it all around, if they manage to make a profitable foundry business, if they manage to, well, actually make Gaudi 3 a successful product for them, then yeah, I do think that under $100 billion, Intel will look, well, in hindsight, will look ridiculously cheap. That's, of course, if they can execute correctly. And if not, then, of course, the problems will just continue to be problems for years and years ahead. And we'll probably see a shift in management, shift in vision, maybe selling more assets of the company, etc., etc. Maybe. Now let's talk about this whole Qualcomm stuff. Let's also remind you what has happened in the last couple of weeks. If you're interested in all of that, Sit back, relax, hit all the buttons, like, subscribe, do all of that. We really appreciate it. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start with the key partnerships. So we've got one from AWS, Amazon, a multi-year, multi-billion-dollar deal for wafers and custom Xeon 6 chips. Department of Defense, a classified project worth up to $3 billion for secure enclave technology. We also heard that Intel Foundry will become an independent subsidiary, offering greater transparency and flexibility. Investments in the United States manufacturing capacity are continuing, while projects in Germany, Poland, and Malaysia are being paused or slowed. As for the unit restructuring, so edge computing, automotive, and silicon photonics units are being reorganized. Network and edge software and incubation businesses are being integrated into core units. So CCG, also there is data center and AI. Then we've had the first report. So Intel gains on report that Qualcomm may takeover approach. Qualcomm declines on the news, reflecting investors' concern. Intel announced changes earlier this week in comeback bid. We've talked about that. Now, Broadcom isn't currently considering an offer for Intel Corp. Broadcom was previously assessing a potential bid for chipmaker Intel, according to Bloomberg report, which cited people familiar with the matter. Advisors continue to pitch ideas to Broadcom. By the way, Broadcom did try to acquire Qualcomm a couple of years back. That did not happen. Then, chipmaker Qualcomm to explore takeover of Intel. So Qualcomm has approached Intel to discuss a potential acquisition of the struggling chipmaker. People with knowledge of the matter said, raising the prospect of one of the biggest ever M&A deals. California-based Qualcomm proposed a friendly takeover for Intel in recent days. The approach is for all of the chipmaker, though Qualcomm hasn't ruled out buying or selling parts of Intel in a combination. We've talked about that in the past. There were some rumors about Qualcomm being interested in buying the design side of Intel. I think that will never happen. It's either them basically buying Intel as a whole company and then selling some of its assets that are not needed, or it's not going to happen at all. Now, if they do become one company, it's going to be the biggest chip maker on the planet, basically, or the biggest chip company on the planet. Intel's revenue is $55 billion a year. Qualcomm's revenue is $37 billion a year. Combine that together, it's going to be a giant. Now, what you can see here in green is basically Qualcomm's free cash flow in the last 12 months. So that's $12.5 billion. In the orange yellowish, that's Intel's free cash flow, which is negative $12.5 billion. So basically, you become free cash flow break even if you take both of those companies together. Now, what are the pros and cons? Well, the pros. Qualcomm could expand its reach beyond mobile into PCs while they're already expanding a little bit into PCs, as we've talked about in previous videos. So they could expand beyond mobile, servers, and potentially other Intel-dominated markets. This would diversify Qualcomm's portfolio, reducing dependency on the smartphone markets, which is, by the way, why you are seeing Qualcomm's revenue come down a little bit, because there was weakness in the smartphone market. Intel has its own manufacturing facilities, which could give Qualcomm, traditionally a fabless company, more control over its production process, potentially reducing costs and dependencies on third-party manufacturers like TSMC. By the way, Qualcomm, ARM-based Intel x86. Intel's brand in the PC and server market is strong. Combining this with Qualcomm's technology in mobile and now expanding into PCs with ARM-based chips could create a more versatile tech giant. I mean, it's going to be probably one of the best businesses, I think, to own if they do merge. But yeah, again, I don't see it happening. That's my whole point. Intel has a deep R&D background, especially in x86 architecture. Qualcomm could leverage this for new product development, particularly in integrating mobile and PC technologies or advancing in AI and machine learning applications. Post-acquisition, there could be significant cost savings through the consolidation of overlapping operations, R&D, and administrative functions. And the last one here, with Intel's effort in AI, like Meteor Lake chips with AI features, Qualcomm could enhance its position in AI hardware, especially important in the era of AI PCs. Now, as for the cons, such a merger would face Intel scrutiny from antitrust regulators due to the reduction in competition in the semiconductor industry, particularly in PC and server chips. Intel and Qualcomm have different corporate cultures. Integrating these could lead to friction, potentially resulting in a loss of talent or decreased morale. I mean, the morale at Intel right now is already quite low with the 15,000 job cuts, so yeah, I guess there's that. Intel's market value, though diminished, still makes this a high-cost acquisition, potentially straining Qualcomm's finances, especially if the integration does not yield expected synergies. Both companies have overlapping products, CPUs, GPUs, which might lead to internal competition or the need to discontinue product lines, potentially wasting resources. Investors might not favor the deal due to the risk involved, as seen in Qualcomm's stock price drop when the news broke, but not by much. This could affect Qualcomm's market valuation negatively in the short term. Merging x86 architecture with ARM could be technically challenging and might not immediately appeal to customers or businesses accustomed to specific ecosystem. I think they'll still stick Intel x86, Qualcomm ARM, and Intel has said in the past that the foundry side of things should be for x86 and ARM, so I don't really see an issue there. Mergers often lead to job cuts due to redundancies. Again, Intel is already cutting jobs by quite a lot, so that point, okay, is fair, but I think the biggest hit has already happened. The last one here, Qualcomm's move into PC and server markets might dilute its focus from its core strength in mobile technology, potentially leading to a lack of focus or expertise in key growth areas. Yeah, maybe, but then again, that's probably why you have the Intel side of things. So those are basically the pros and cons. To me, of course, I don't see it passing the regulatory issue. So point number one, especially not in China. So yeah, that's just my opinion on the matter here. Then we've got another thing that came out here. So Apollo is set to offer multi-billion-dollar investment in Intel. Apollo Global Management has offered to make a multi-billion-dollar investment in Intel Corp, according to people familiar with the matter, in a move that would be a vote of confidence in the chipmaker's turnaround strategy. The alternative asset management has indicated in recent days it would be willing to make an equity-like investment of as much as $5 billion in Intel. I mean, it's quite a lot of money, especially for a money-burning business of Intel right now, plus all the cost savings, the tens of billions of dollars that they're trying to save. I mean, that could be huge for Intel. Nothing has been finalized, the size of the potential investment could change, and discussions could fall through, resulting in no deal. Of course, with the rumors and reports coming that, Qualcomm might be interested in acquiring Intel, then we've got Apollo potentially willing to invest $5 billion in Intel. I mean, these things coming one after the other is not a coincidence. We've seen that with Wiz and Google, for example. This was basically leaked to increase the value of Wiz so that when they go public, it will be valued for more. And it's all a game here. But we also know that Apollo did, I believe, commit for $11 billion. When it comes to the Ireland fab of thing, I think the joint venture, they took a 49% stake there. So yeah, Apollo and Intel, I think there's quite a good relationship there. Of course, I'll post the correct figures on the screen right now. But yeah, interesting times. As I said, I don't think it's a coincidence that we're seeing this report come out one after the other. And so right now with Intel stock, it's at $22.17, trying to make its way above the 50-day moving average. We'll see what happens. It's not oversold anymore on the weekly. There's definitely a little bit of momentum, but we started the week with a reddish candle right now. With Intel, I mean, short term, a lot of things can happen, lots of volatilities. They can sell part of their business, they can raise money, more cost cuts, more announcements, partnerships, you name it. That can impact the stock in the short term. But in the long term, to see the stock go up, to see the company being worth over $100 billion, it's all about executing. It's all about making sure that their product roadmap is on time, is backed in the leadership positions. Especially, I mean, I would love to see a successful Gaudi 3, because Gaudi 1 and 2, let's be honest, didn't really work out. Hopefully that can change with a Gaudi 3. So yeah, that's about it. Do I think Qualcomm and Intel will be one company? I highly doubt it. Do I think Qualcomm is a bad company? No, I actually love this company, so why don't I own it? Well, clearly I chose Intel here for the turnaround story. Hopefully it does work out. But yeah, let me know your thoughts down in the comment section below. Are you a shareholder of Qualcomm, of Intel? Do you mind having both of those companies merge as one? Let me know down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye bye.